And it's my great pleasure now to introduce our first speaker, Ian Goldin, who is Professor of Globalization and Development at Oxford University. He was founding director at the Oxford Martin School and is the current director of the Oxford Martin Program on Technological and Economic Change. Ian's had an esteemed career, which has included the World Bank, the OECD, the Development Bank of Southern Africa, and he was an advisor to President Mandela. Even before this current crisis, globalization was under threat due to the wave of populism around the world. So, what does this crisis mean? Does this mark the end of globalization? That's something we're going to explore with Ian today, and what deglobalization could look like given the interconnectedness and the complexity of the economy, and importantly, what that all means for investors. So Ian is going to give some introductory remarks, and there'll be plenty of time for questions, both from me here in the studio, but also from you at home. So please do send through your questions. Welcome, Ian, from Oxford, and over to you for some introductory remarks.
Thank you very much, Amanda. It's a great pleasure seeing you, being part of this. And this in itself is, of course, a reflection of globalization. One thing that the coronavirus has done is compress into a few months trends that would have taken years or decades to emerge. And one of them is the acceleration, of course, of digital globalization. We're seeing a dramatic increase in this, on many counts, 10 times the traffic this June compared to June 2019. And so those that say globalization has been killed by the pandemic, I think are only reflecting certain dimensions and particularly reflecting where they stand and look at this from. What the pandemic has done is to compress as well the move of the center of gravity of globalization from across the Atlantic to the Indian and Pacific Oceans. And that places Australia, the East Asian, Southeast Asian region particularly, in a very good spot. And of course, the fact that countries in that region are exiting the pandemic faster, have handled it much better than many in North America or South America, also will accelerate this trend. And so if one goes through the different dimensions of globalization and asks oneself, how will this pandemic impact on it? My own view is that there are very few things that are likely to be sharply changed in terms of the direction of change, but they will be sharply accelerated. Supply chains had already reached their peak level of fragmentation in 2019. I was saying last year that we were going to be seeing a consolidation. That's really four things that were happening long before the pandemic, which again, the pandemic has accelerated. The first is the technological changes. Automation, robotics, 3D printing are making the comparative advantage of supply chains not cheap labor at far-off locations, which drove them abroad, but increasingly the price of capital and availability of skilled labor to maintain and operate these machines. The second big trend is customization. Customers increasingly want individualized products. These can be done very easily on automated production lines, but very difficult on people ones. For example, in Oxford, we have the Mini car production factory, BMW Mini. They have over 1 million varieties of Minis that can be produced for different customers. Those are individualized by the automated production line. The same is happening with shoes into individual sizes. The same is happening with T-shirts. It's happening across the board, and it'll happen with drugs. The third big trend is immediacy. We want our things delivered today or tomorrow. We don't want them shipped in a container to be delivered in 2 or 3 weeks' time. And that brings things back closer to markets. And the fourth, of course, is the political trends of nationalism, protectionism, which have been accelerated. So we will see consolidation near the big markets. And I believe we particularly see consolidation in Asia, in Southeast Asia, and not least in China, but also in Europe and North America. Financial flows will accelerate. There will be a repricing of all assets, all asset classes, I believe, as a result of this pandemic. This was happening, but will be accelerated, both in where assets are and their price values. We've seen it already dramatically with commodities, not least oil and fossil fuels. That will continue. There's no return for fossil fuels, and it'll happen in many, many other areas. This will lead to a wave of mergers and acquisitions of foreign investment. and of course, huge new opportunities, as well as some real declining valuations. It's also the case that official flows will greatly accelerate. Over 100 countries have applied to the IMF for bailouts. They'll need it. And so we'll see both private and official flows greatly accelerate. The one area that I think will change rather fundamentally is business travel. I think we've learned to do things virtually, and that's become something which is an asset. We need to do it to save costs. We need to do it to save carbon emissions, and it has efficiency benefits. It won't eliminate it. It'll shift the curve down. Tourism travel, I believe, will rebound. And we're already seeing that in Europe, for example, where places have left their lockdowns. So I think that will rebound. So when you go through the different dimensions of globalization, I think it's clear to see that it's not going to be the end. It's going to be a new type of globalization focused over Asia, more with Chinese characteristics. And I think that means that there's going to have to be a rethinking of many of the investment strategies for funds. Other things which have been accelerated by the pandemic include a total rethinking of the role of governments. We've seen the old taboos around debt and deficit levels just thrown out the window. What was regarded as impossible in January is mainstream in June. And that really reflects the way that the world's changed. There's no going back on this. It will have dramatic implications. It will mean higher levels of taxation going forward. It will change the nature of the sustainability growth paths for different countries, depending on how strong the fundamentals were going into the crisis in terms of their long-term behavior. Clearly, government is back big time. The conservative governments are out Keynesian, the Keynesian previous governments. And I think we'll see a changing deal between young and old. The young are sacrificing their jobs, they're sacrificing their social lives, they're sacrificing their education to keep elder people alive and safe. And there's going to have to be payback for that in the way that we regard young people. There will also be political ramifications. The politics is, I think, the most uncertain dimension of this. I think the pandemic has taught us that it can come from anywhere. If we're to manage global threats, we need more cooperation. We're certainly going to need that for a vaccine, and that's happening. So the lesson should be that we need stronger global institutions and more cooperation. Of course, what we're seeing in many places, not least in the US, but also in some other countries, is more nationalism and protectionism. We're at a real crossroads here. And the way I think about this is, are we in the First or Second World War? The First World War, of course, led to greater protectionism, nationalism, and austerity and recrimination afterwards. And then we had the Great Depression, the rise of terrible nationalism, and the Second World War. In my view, that would be an even worse pandemic, escalating climate change and other global threats escalating. The Second World War was totally different. In the midst of that war, the United Nations, the Bretton Woods institutions, the Marshall Plan, and the welfare state were created. And so the big question, I think, is the political one. Are we in the First World War, or are we in the Second World War? And that makes a huge difference to all of our futures and to the next generations.
Well, Ian,
I think I'll stop there, Amanda.
Yes, thank you
I
so
hope
much.
I've said enough provocatively to stimulate a
You
conversation.
certainly have, and I'm wondering where to start with the follow-up to those questions. There's so much there that you covered. We've got some sessions coming up on geopolitics and specifically China. But so what you're saying is that globalization is not going to stop, but the nature of globalization may change. With regards to China in particular, looking forward, let's say 10 years, where do you see the role of China in the global economy? Can you give us some sort of forecast of what that dynamic might look like?
I'm very bullish on China. I think what they've demonstrated is a capacity to manage the pandemic. Not only China, but neighboring countries. Vietnam has done astoundingly well as well. So has Taiwan, of course, South Korea and others. I think China will rebound. The domestic market is big enough that exports don't have to be a driver of change going forward. So the quality of growth is improving. You know, for China, 6% is regarded as low growth. Most of us would give a lot to have 6% growth. They've had over that on a sustained basis for 40 years. I think their demography is going to be an absolutely critical dimension. There are 4 million less workers because of this demographic contraction, because of the aging this year than last. So for them, robotics, automation, AI is a blessing. It allows them to substitute capital for labor, whereas for many places with high unemployment, not least Africa, Latin America, it's a real curse. So I think they'll be in a good space. I think we'll see the economic center of global gravity focused above China. It'll be a different quality of growth, a better quality of growth. The big questions are the geopolitical ones. Are we entering Cold War 2.0 with China and the US at the center of that Cold War? And if so, will other countries, not least Australia, European countries, the UK, the US allies of the past, be forced to take sides? We're seeing it played out in 5G with Huawei. Is it going to play through into other areas? That would be disastrous for global growth. It would be disastrous for all of us. But we shouldn't rule it out, not least because I think a Democrat presidency in the US would be as anti-Chinese as the Trump presidency, although they might be slightly more sophisticated in the way that they manage that relationship. So I do see a very bullish outlook for China relative to the rest, but there's a lot of uncertainty.
Thank you, Ian. We have some questions coming through from the audience, but before I turn to those, I just want to open up our first poll question to get a read of the audience in terms of what they're thinking around globalization. So what form will globalization take in the New World Order is our question. And the options are large-scale de-globalisation or nationalisation, more regionalisation, trading between regions, C, trading with allies only, D, globalisation will continue as normal, or lastly, globalisation will eventually reset and accelerate. So while those answers are coming in, yesterday we also talked about some issues around supply chain management, and you mentioned that in your opening address. Do you think that technological developments and some of the advancements of globalisation will negatively impact developing countries in particular? Can you comment on that?
Yes, I do think that the technological developments are a major threat. A lot of people have talked about digital leapfrogging. They point to a few cases of really good news, and it is good news, not least on telecommunications, on mobile banking. But those are few and far between in terms of the whole development trajectory. I worry a lot about the 10 million workers a year that are coming onto the job market in Africa, when the middle rungs of the development ladder have basically will increasingly be removed. You know, Asia and other developing countries grew through labor-intensive work. That's the East Asian model, the Asian tigers, the flying geese, whatever they're called by the different development economists. That model has disappeared basically. And so the real question is not only for manufacturing, but also for services, where is the labor-intensive jobs of the future for poorly skilled people? And it's not only making things physically, it's also services. So call centers are now, we've reached the stage where automated call centers are getting better customer service responses than human call centers. The same is happening with back offices, for banks, for financial firms, for insurance firms, for law firms. That basically it's all digitalized, and what used to be done by tens of thousands of people in Bangalore or the Philippines can now be done by a server in the basement of your building, posing a massive question as to these countries that are growing rapidly with very high fertility, with big youth bulges. Where are the jobs going to come from? So yes, I think that's an absolutely critical question.
So the results are coming in, Ian. Overwhelmingly, more regionalisation is the answer from our audience. 55% think that trading between regions will be the new globalisation, followed by globalisation will eventually reset and accelerate, and then roughly split between the other three. So what are your comments around those results?
Well, I think they're sort of compatible with what I think is going to happen. I think the center of gravity will be Asian. It places Australia and countries in that sphere in a good position. I think the US is basically de-globalizing itself through its policies. and Europe will stay connected, but at different levels, increasingly services trade. So the big question in the regional world, and this is one that is at the heart of the World Trade Organization, was at the heart of the GATT, is it's not as good as a global world, and it's particularly bad for weak regions. Where does Africa fit into this? What is the prospects of Africa? It's okay if you plugged into China, but it makes you very vulnerable. And of course, it also leads to more unequal trade relations because you don't have those global rules of the game, which are embodied in the WTO. The Cairns Group, Australia, was intimately involved in the creation of these, but it's about protecting small players against the big giants. And if we get into a world we're basically dominated by the US, Europe, and China, and then in the medium term, maybe India becoming a big player in that, we're in a world of unequal terms of trade. And that's not a good world to be in. So I think it's right. But I don't think it's where we want to be heading. I think we need to protect the global rules-based world trading system.
Ian, we've got a question here from Stuart Brentnell, who's the Chief Investment Officer of T Corp in Australia, which is a $110 billion New South Wales state government fund. If cooperation between countries is required as we exit COVID, will we see this in the reopening of borders, and how international travel will reawaken, or will it be chaos?
I think we're going to see, the US has always taken the lead globally in these arrangements. The US is withdrawn, is actively trying to disrupt them, as it is the World Health Organization, the World Trade Organization. So I think we're going to see safe spaces created between countries. Australia and New Zealand are doing it already. We're seeing it in Europe, with Greece now opening up to travelers from certain places. So I think we will see these safe corridors, and we might even see in international hubs, like, say, Dubai, safe terminals between these, providing a corridor route between these hubs with very low levels of new cases. So I think that is the case, that we are going to see a very multi-speed and very asymmetric system developing with agreements between countries. It's a real problem, though, when you get into airport hubs. And so we might see a reconfiguration of hubs so that we don't bump into people from very high incidence places when we're traveling between low incidence countries. I think that's the big worry, that the airlines very quickly become the conveyors of new waves of coronavirus. But I do think that that is how it's going to play out, because it shouldn't be, but it's the absence of global authority that will create that.
In your book, Butterfly Deflect, which is a couple of years old now, you argued that globalization in a hyper-connected world is vulnerable to global emergencies, and you predicted systemic risks such as health pandemics. What else should we be looking out for? What are some of the other systemic risks that we're not taking into account, and particularly given that this audience is investors, what should they be looking out for from a risk point of view?
Yeah, in the butterfly defect, and it's an obvious play on Lorenz's butterfly effect, modeled on when a butterfly flaps its wing over the Amazon, it creates a tornado in Texas. That in that book, but every year since then, I've been predicting that it would be a pandemic and it would be the cause of the next financial crisis. So no joy out of saying I told you so, but it was inevitable. Not only that we'd have a pandemic, but that it would lead to a financial crisis. I think there's lots of other things we're not mindful of. If Hurricane Sandy had been a bit bigger, it could have taken Wall Street out and led to a global financial crisis. And there's going to be a lot more climate-related events of that sort of nature, but different natures. I think there's hyper-vulnerability around the digital system. And as we become more and more digitally interdependent, we're more and more vulnerable to that. It could either be deliberate through cyber attacks, or through someone deliberately snipping one of the key cables, or it could be an accident. A ship dragging its anchor through the Suez Canal or something would destroy a lot of connectivity between the East and the West. So I think that is a key area of vulnerability, and it's difficult to imagine how digitally interdependent we are in every way now. So that maybe would be number one. I think there's lots of other potential sources of financial cascading crises. It was really rearview mirror fixing that I think led people to create the Solvency II, Basel III sorts of regulations, which now govern the financial system. There's a lot of finance which is not captured by that. The whole grey financing area, hedge fund activity, many others. But there's also a whole lot of types of risk that aren't captured by that. Those are focused on size of firm and systemic risk, but not co-location. There's no geography factored into it. And we need to worry much more about geography. Anything that's focused on one building or one street or one city, having the assets, the people, the knowledge, is vulnerable, whether it's Hong Kong, whether it's Sydney, whether it's London, whether it's Wall Street. You don't want to be all in one place. And I think that geographical dispersion is something which people haven't appreciated. There are too many headquarter firms located over the street from each other around the world, in the UK, in the US, in San Francisco, in Silicon Valley, and elsewhere. So think geography, think of things happening, an earthquake in California, a big hurricane in New York, a terror attack of a different nature, a pandemic that totally takes out a place, not like the ones we've seen where you can work from home, cyber collapse, and then think about how your assets are likely to perform and develop a diversified portfolio. The problem is that you might be right in the medium term, but wrong in the short term. And that then speaks to the way that people price assets and liabilities, mark-to-market accounting, quarterly reporting, and so on. My own view is we need to educate our shareholders, our stakeholders of different types, that resilience has a cost. And we need to measure that. ESG, of course, is pushing in the right direction, because that is building resilience particularly against moving to a zero carbon world, but it's not enough.
Yeah, we've just got time for one more question. There's a couple of related questions here about technology, machine learning, global tech companies. How do you see all of that playing out in a regional sense between the US, China, and the rest of the world? And sort of, what's the race to win that technology war? Who's going to be the winners and who's going to be the losers?
Yeah, it's absolutely vital. And of course, trying to understand the equities bubble at the moment while the whole world is locked down and firms have no income or cash flow. Part of the explanation is through understanding what's happening with technology valuations, not least on the NASDAQ. But my own sense is that this need not be a war. I mean, when you look at, for example, the AI recruits, which I've been doing, and the machine learning recruits of the big firms in California, 30% of them come from China. They're China grads that are basically running these systems. The same is true when you look at a company like DeepMind and many of the others at the forefront of Google and other people's work. So the idea that we're not interdependent on AI, of course, is a nonsense. And if you really try and sever that link, it's going to set AI and ML back a very long way. But I think we are being pushed in that direction. Clearly, President Trump believes that's necessary. I think he's completely wrong-headed about it. But it seems to me, would we get a different outcome under Biden? I'm not sure. So it's going to slow it down. I think in the end, we're going to see China win that race. They just got more brain power. They got more capacity. They got more state funding. There's more integration between government financing and the private sector. Used to happen through DARPA and other agencies in the US. That is being undermined by budget cuts and mistrust between government and Silicon Valley. So I think we will see that in the end, this is not going to be something that's going to be anything other than an Asian tech leadership. My hope is we don't have to go into that trade-off. In this trade-off, Europe really is the third run. Maybe it's the fourth run once India accelerates behind that in terms of a league. Where Europe plays in this and the decisions Europe makes and whether Europe's forced to take sides is absolutely critical for the future of Europe in this regard. But I think the fundamentals point very much in Asia's favor in this regard, particularly Southeast Asia.
Ian, so many very important issues that you've raised this morning and this afternoon, wherever you might be in the world. Thank you so much for your time. It's been an absolute pleasure speaking with you, Professor Ian Goldin.
Pleasure, and good luck to you all in your lives and with your investments.
Thank you very much.